What is up, everybody? Rory McDonald from MacDon and Associates. Very excited to have you guys with us today. I have a special guest who, business partner, friend. I mean, I'll let you do your own intro, but excited to have you in the studio talking about what we're going to be getting into today. Kind of a hot topic in the world today, one that's serious and kind of close to our hearts, I'm sure, too, on the insurance side, being in California, things like that. So without further ado, Brian, tell everybody a little bit about who you are, what you're all about, and some of your background.
Yeah. So my name is Brian Edwards. I'm the owner of Royal Oath Insurance Group and have some other projects I work on too, but my main gig is Royal Oath Insurance Group. We're here in Clinton Township on Hayes and Canal Road. Been in the insurance industry almost 2 decades now. So knowing you, I think, for a decade of that, right?
I think it's more than that.
Yeah, probably more than that.
Almost 15
Actually,
years.
I knew you when you were like,
a little guy.
Yeah.
Just a little guy.
Right.
So, we're here. We do auto, home, life, and a lot of business insurance. So, but happy to be on today. And I know we're going to talk about some insurance topics. So I'll give you my small view on that.
Yeah.
And we'll let it roll. So
yeah, no, I think it's
thanks
good.
for having me.
Absolutely, man. So one of the, obviously the biggest thing in the world going on right now is not a hurricane anymore. All of a sudden it's these fires that are taking place in California. And I think the biggest thing that, to kind of tee this off and get it started, like the biggest thing that people need to understand is the full scope of everything that's going on out there, and how all of the things that have taken place prior and leading up to these fires taking place, and more importantly, insurance is being canceled for people. What is it that led to that, right? So just to give and speak on this too, because I know that you know this topic a little bit better than I do, being the insurance background, but you have a situation where you have a lot of down trees, you have all kinds of things like that where things are dried up and they're not being cleaned up. Regardless of whose job it is to clean it up, they're not being cleaned up. It's creating a hazard. You've got water supplies being cut off to citizens and what it is that they use when it comes to being able to put out fires. You have funding that goes to fire stations and being able to support people also being cut. How does all of that stuff play a role in what it is that's taking place here? And more specifically, even the insurance being cut off, if that makes sense. I don't know if you can speak to that or not.
Yeah. So lots of layers to this, right? So specifically talking about the California fires that are going on right now, and not to get too political, but it is political in nature. Because at the end of the day, everybody's like, who do we blame, right?
Sure.
So, but there's multiple factors to all of it, and just to say there's a dividing line, and there's good guys, and then there's bad guys, and the bad guys caused all this or whatever. I don't really subscribe to that. I think there's multi levels to, from the consumer standpoint, how they handle things. Obviously, it's not their fault. There's a wildfire, but I'll get into that in a minute. But a lot of what is happening, especially in California, and then you have some of this in Florida too, but Florida's cleaned it up a bit. It's still a problem, but they've made some headway and things, and it really comes down to legislation, right? So there's this, there was some legislation in California for like 3 years. Insurance carriers couldn't raise rates, right?
Okay.
Which, as consumers, everybody's like, I hate when my rates go up. And I didn't do anything, so why did my rates go up, right? Well, the truth of the matter, the way it works is, if you wanted to do a merit-based system based on, and there is some merit based in all of insurance, however, then you would self-insure, meaning you would say, hey, whenever there's a problem that comes up, I'm just going to pay for it out of pocket.
Mm-hmm.
Well, the problem is that sometimes your problem is much larger than your ability to pay for that.
Sure.
So the whole idea around insurance is pooling your risk with other people. So to say like, well, I didn't have a fire, I don't live in California. Well, if you're with a national carrier that insures there, that money's in the same pool, right?
Yeah.
Technically, some states, they have a fund and they say this is for California and it's affected by California residents. And not to get too technical on it, but in general, the idea is that you're pulling the risk with other people. So if you think about a pot of money and everybody contributes their premiums into that pot, well, when there's a lot of money taken out of that, it has to be replaced.
Yeah.
So people have to put it back in, right? Well, when a state comes in and says, hey, you can't raise rates, and the carriers are saying, well, but we've taken millions of dollars in losses, but we can't raise rates. So what they say is, hey, well, we're not going to do business here anymore, right? Yeah. Which then limits the options for the people, kind of hurts the consumer. Now, California does have this this pool, which is called the FAIR pool. Not to get too much into it, but it's if you can't find some place to go, if you can't find a standard carrier to get some insurance, you can at least get some basic insurance, and then there's some add-ons or whatever. But the problem there is really it comes down to legislation, and not to pick on California, but the same thing with Florida. For a while, what was happening in Florida is their laws made it so that when somebody has a claim, they automatically got what's called a public adjuster. A lot of people did this down there. They got a public adjuster, and this public adjuster would come in and say, we're going to fight with the insurance company to get whatever is fair. And then it would go to legislation. So let's say that you have a $70,000 claim on your house, and then the company ends up paying that anyway, but then they pay all that money in legal fees. And a lot of claims just got tied up in the system. So they made some changes a few years back to try and change it. But a lot of this comes down to legislation. It really does. It just, and I get it. Some people view insurance carriers as that's a big bad insurance carrier. And sure, there's probably some bad actors out there, and I'm sure there's some bad experiences. But my view typically is that insurance carriers do the right thing. And yes, there are some bad experiences that people have, but overall, you can't afford to, if your house catches on fire, most people can't afford just to say, hey, I'm just going to rebuild it with my own money. Yeah. So you're either a part of the system or you're self-insuring, and it's more of a merit-based system where, hey, I didn't have a claim this year, and so I didn't have to pay anything. But the problem becomes when it's the big claims that you're insuring for. I think a few other things that happen, you had mentioned, like, should they clean up the brush? Should they get? I think a lot of that, again, comes down to legislation. How much is in budgets? People pointing at you, they go, well, it's not my problem. I shouldn't do this. But at the end of the day, I think we're all responsible in some way for it. And we have to, unfortunately, the person that suffers is a lot of time it's the consumer, right? And I will tell you, carriers over the last couple of years have had a lot of problems with these pop-up storms. To give you, for instance, they plan on like 1.5 to 2 catastrophic events, right? And
taking place per year.
Yeah. And so, like in the state of Michigan, we had a couple years ago, I think, when that tornado ripped through over by there was one like in Lansing area or whatever. I forget the name of the city or whatever, but I know for one of our carriers that was a $40 million loss, right? Yeah. And that was like the 4th or 5th event, and we're only halfway through the year that happened, and they planned for 1.5 catastrophic events. So these kind of pop-up storms, they don't help. It does affect everybody. So you might not have been a part of the tornado in Lansing, but at the same time, you're paying into the same pool with those, with those customers as well. Sure.
So the thing that I've been kind of listening to and focused on and trying to understand, and I have a very elementary preschool idea or understanding when it comes to insurance, which is why I wanted to have you on. Yeah. One of the things that I learned in the process of getting my insurance license, because those of you who are listening, I'm also with Royal Health Insurance Group. Yeah. The thing that I realized and learned is carriers weigh the risks and determine whether or not you're worth taking on as a client, or if we need to charge you more to make you worth it for us to insure you, kind of a deal. For example, you are a 16-year-old kid, or you got a young kid in your house. Hey, we're taking on more risk. Naturally, your cost of insurance goes up. Your house, for example, your roof is ridiculously old, and while we did the inspection, we noticed 20 cars on the property and empty gas tanks, and like all of that stuff.
Sure. Yeah.
I guess do they go to a broader scope of going, hey, we see that there's a fire hazard right here? Like, for example, in Florida, I would imagine that they're going, hey, we know that this area is prone to floods. It has flooded. We know this area is prone to floods.
Yeah.
It has hurricanes.
Right.
Is in California, and I know that this is a little bit far off because we're in Michigan here. I'm just, one of the things that I'm seeing, this is the reason why I'm asking this, is one of the things that I'm seeing people often go to is say, look at the insurance company, look how bad they are. Look at they canceled all this stuff. Time out. There's a reason why they canceled this. First and foremost, they're employing people within the state.
Yeah.
Like, this isn't just like, you know, big corporate America coming in and selling insurance and, hey, you get what you want, deal with it, and then we're going to cancel you because we're going to screw you over. No. They employ people there. And I would bet that some of their employees even have their insurance that might have been canceled. And it's the company going, hey, we just can't afford to take this on anymore, knowing that this is going to end up becoming a problem. It's just close to my heart. Is that something do they look through the broader scope of that though?
Yeah. So the rewind 5 years ago, the amount of inspections that we would get on homes would be very minimal. And in fact, there was a time we would run out and take pictures of the house and submit it with, you know, the file. Yeah. Now they leave it to a lot of their own people, and it could be random, you know, where they say, hey, you know, based on the criteria your house is 1955, and we see in the application, your roof is 18 years old. They want to get some eyes on that. So a lot of times they're looking at roofs, they're looking at fire hazards. They sometimes notice pets that aren't disclosed. You know,
okay.
You got 5 German Shepherds in the backyard, you know,
10 pit bulls.
Yeah. So the number of inspections are going up, but a lot of it has to do with the property, like the cost to replace property. So inflation has played big time into that. For a while, the supply chain was playing into that. You know, it costs more money when things take longer to get to you. Jobs take longer. You have to pay, you know, more labor. So that stuff is kind of out of whack. I think we should see it come back a little bit over the next couple of years based on what I'm hearing from our carriers. But really, yeah, they're looking more closely at a lot of things. And honestly, the roofs have become a problem.
Within Michigan?
Yeah. Okay. Yeah. Especially in our area. There's a lot of bad actors. So you get somebody who says, hey, you know, you looks like you probably had hail damage. We had hail come through here. And then they go up on your roof and they magically find hail damage. Sometimes it's legit and sometimes it's not. So, and they have ways to try and get that covered, and the homeowner's like, I don't want to pay $15,000-$20,000 for a roof. So yeah, let the insurance company pay for it. Well, we all pay for that, you know? And, I know I even had a guy come by my house. He's like, I literally just put a roof on my house like a year ago, and, comes up. He's like, oh, that roof looks really old. We should get that fixed for you. There was some hail damage and some winds in the air. I said to him, like, did you really look at it? Or is that just what you say to people? He's like, oh no, man. I mean, I was like, well, how old's my roof? He's like, oh, it's got to be 20 years old. I'm like, that's a brand new roof.
Yeah. Last year. It's
like,
actually
now I'm offended because I thought it looked really great. So, and I spent a lot of money on it. So yeah, but so you get some of that. But yeah, they're looking more closely at properties. Actually, the funny thing, auto for years has been just a massive problem in Michigan because of our unlimited medical laws and for a variety of reasons or whatever. That's actually pretty stable right now. The property piece is the problem. Plus you have aging buildings too. You know, you've got aging commercial buildings. You know, if you own commercial real estate, nobody wants to put a $200,000 roof on their building, right? Right. Like, well, if we get a windstorm, you know, but at the end of the day, we all end up kind of paying for that. And so it's kind of a general attitude too, towards like, what is insurance for? Right. Our philosophy and what we preach to our clients is that you use your insurance for big stuff. Don't nickel and dime it. You know, don't make a $800, $900. I mean, if you have to, I get it, but don't make an $800 claim when you have a $500 deductible. And it just doesn't make sense, right? Sure. Save it for, you know, hey, your pipe busted and ruined your floors, and you've got damage in your drywall and that kind of stuff. Like save it for the bigger stuff. Kind of decide like what a threshold is of like, hey, if it goes over this, I want to, I want the insurance company to pay instead of just kind of little stuff. Cause the little claims kind of hurt you. It's same on the auto, you make a bunch of towing claims. Those hurt you. Carriers count against that. Or like, several windshield claims. There's just some stuff. It's just better to pay out of pocket and leave your insurance for the big stuff.
Yeah. Yeah. That makes sense. So here's another question that I had for you. With all this taking place in California, you mentioned like the different pools that exist and things like that. How will, for people living in California and then people living just in the United States in general, and specifically us here in Michigan, how is what's taking place in California potentially going to affect people?
Yeah, again, it goes back to that pool of money, right? So now I read this morning that the federal government is stepping in and covering a lot of things for the next 180 days or whatever. I don't know how much that will affect because I know they president was saying like it's going to affect like if people need shelter, if they need basic needs and things like that. So, and a lot of people have that in their insurance policy as well. But the bottom line is, again, it's that pool of money, right? So when carriers take large losses like that, I mean, it's billions of dollars right now, right? Yeah. So when they take large losses, they've got to fill that pot of money back up, right? And I know a lot of people say, oh, well, the insurance companies have millions and millions of dollars. Well, if you look at the amount of acquisitions and carriers that have went out of business over the last few years, it's kind of staggering actually. Or they've been acquired because they can no longer function. The amount of, so there's a rating system of by AM Best where they rate carriers, and usually who gets pummeled is like the regional carriers, the ones that operate in just like 5, 6, 7 states or one state or whatever. You've seen some of acquisitions or even restructures with how they are restructuring their companies, or just being acquired by a larger company. So yeah, it gets passed on to the consumer. That's the unfortunate part. Yeah. But it's also the nature of how insurance is set up in the first place, is that when something catastrophic does happen, you don't go bankrupt because your house burnt down. Yeah.
Yeah. Just be ready for it, people. The biggest thing that you need to be paying attention to, and it's the reason why I wanted to bring Brian on specifically, is if you're in some of these big names and this is going to affect your insurance rates, you need to have somebody to call.
Yeah.
Give Brian a call. Yeah. Here's another piece of this. I think if you go back to 2020, when we saw COVID taking place and everything that was taking place in the real estate market, what we saw was people fed up with how things were being handled in certain places. Michigan being one of them, California, New York, some of those different areas. And what we saw was this flood of people leaving those states, going to Florida, going to Tennessee, going to Texas, all those different places. And what we saw in that happening is a lot of those people who were leaving California, they bought this house for $250,000 35, 40 years ago.
Yeah. And
now they're sitting on a $2 million house because just inflation went crazy out there and the cost of homes. And so now they're moving to places, for example, Michigan, and they're buying a $300,000 house. They don't care if they spend another 50 grand on it. They're paying cash anyways. Yes, I want this house. And now it raises the prices of everything else around too. I'm interested in seeing over the course of the next 12 to 18 months how this ends up affecting the real estate market. Obviously, like on a more immediate, like in the next 6 to 12 months, because policies renew that fast, your people are going to start seeing their rates change a little bit. On the real estate side, 12 to 18 months just after that, when people go, holy crap, how much is my insurance out in California? I'm getting out of here. I can't afford to live here anymore. Yeah. And they're going to flood to all these other states, which is going to be great for the real estate markets, but it's going to be really hard for those who are looking to purchase homes.
Sure.
Because
limited supply.
Limited supply. And now there's more people in the market looking, and they have cash.
Yeah.
So I'm really interested to see how that all shakes out.
So COVID, wildfires, government. I mean, we're just hitting the hot top. You're coming in hot today, man.
Dude, this is the biggest thing.
This is good. I mean, this is good, but you got to talk about it. But we should talk about you can't say the D word. So on TikTok, have you seen the things that fly up above?
Oh, okay.
They're called Dior bags.
Oh, okay.
Because you'll get banned if you
is that what
use
it is?
the words. So,
Ah.
I mean, we could talk about that too.
Yeah. Non-man choppers. Yeah. Whatever we want to call them, we can get into it. But the biggest thing, I wanted to be on here and I wanted to be talking about this because I'm not kidding you. Every third person, and it's both sides of the aisle. Like I have people who are very left and I have people who are very right.
Right.
Reality is if you look at the broad scope of everything, it's really easy to blame the bottom end of the insurance company in this situation and go, look what they did. They canceled the insurance. Imagine you're standing underneath a waterfall and you've got a coffee cup and you're sitting there trying to catch water. Eventually this is going to get so filled with water and it's going to be so hard for you to hold it. It's going to fall and you can't hold it anymore. The problem is all the flipping water coming down the waterfall. Like, let's go to the top of what it is that's happening. And like, this is me speaking, not Brian. I want to be really clear on this. I'll let you share your own thoughts, but go to the top of what it is that took place in California. And I'm passionate about this because I have family over there. They're 45 minutes from where these fires are taking place. The leadership within LA, the governor of California have so royally screwed up what it is that took place there, removing water for this specific thing to happen where fires always take place. You've got in the name of saving some fish, like, come on, dude, like,
budget cuts.
You got to put your people first.
Yeah.
Budget cuts, $17 million missing from removed from being able to support the firehouses and the firefighters. They don't have any water for a lot of these firefighters when they crack open one of these fire hydrants, and there's literally nothing they can do.
Yeah.
They're watching their city burn to the ground.
Right.
And then you have 40, 50, 60, 70 mile an hour winds that are only adding and stoking the fire coming off the Santa Ana. Like, it just is. This was a storm waiting to happen, and the insurance went, we see this, other people see this, we're out. Like, we're the ones who have to pay for all this once this is done.
Right. Yeah.
And none of you are doing anything to fix it.
Yeah.
And you go even further now. Like, let's say all these rates end up going up, and people end up like, I don't know if it's State Farm. No, it's not State Farm. I don't know what the company is, but they recently left California altogether.
It was State Farm.
They
said they would take no more applications. So I think they have some stuff that are still on the books. Allstate did the same. Chubb did that. Guard did that. There's probably like 10 or 11 companies that just said, hey, hold on. You know, you say we can't raise rates, which we need to do to be able to pay for future claims. And you have all this regulation on us, how we have to operate in the state. They're like, we can't do it because we're just going to basically bankrupt our company.
On top of that, like, one of the areas where they cut were all these areas that were high fire hazard.
Yeah.
Right. And one of the things that the governor came out and he created a bill, and I believe this passed, that they are required, the insurance companies are required to cover a certain percentage. And I want to say it's like 15% of their book must be high risk fire hazard areas.
Right.
It has to be.
Yeah.
Because these people can't get insurance.
Correct.
So, like, okay, we're going to raise the rates of everybody else, the other 85%, as a means of being able to make up for the 15%, because they're going to be the ones that take all the money. These companies are going to end up leaving. And what's going to happen is it's going to screw California even more, because now you're losing jobs. Like, just within our office, we've got 7, 8 people who work here, right? Like, just on the insurance side. Imagine if this is, but I mean, just let's say it's 7 or 8 people. That's 7 or 8 jobs. That's 7 or 8 families that are being fed by what it is that's taking place here, by doing what it is you're doing. Now imagine this just leaves. Like, this is a lot bigger than whether or not somebody's insured or not. This is the ability to be able to feed the citizens who live here. And it goes to the very top. Like, and I know I'm getting passionate about this and kind of taking a political stance on it, but this legitimately pisses me off. Because companies and business owners are getting blamed for something that is truly not their fault. They just said, hey, you got to clean this up, deal with it. And they said, no, I literally need to be able to live. I can't do this.
Right. Yeah. So I think, again, a lot of this comes down to our government has to get fair regulations. And on the other side, though, it's like some of these, like you said, people have to have insurance, right? And carriers have to be willing to know that, hey, we might take a little bit of a loss over here to be able to take care of these people. But there's got to be some balance. Like there can't be this corporate greed where, hey, we're going to make as much as we can and just keep raising rates, and I've seen carriers too in good times where it's like you're sitting there scratching your head. You're like, why are you taking a rate increase? Like you literally just said you had record profits this year. So it's not a good look, and it's greedy, right? But I've also seen the other side of it where it's like carriers are just getting washed because of constant events, and there's just got to be a balance. But
Sure.
I really think it comes down to some regulation. I think it also comes down to being fair, putting people over profits, and so again, there's bad actors in good businesses.
Yep.
There's there's good people there, there's bad people there. I mean, it's never one way. That's what people want to say. Oh, the insurance company's just trying to screw me again.
Yeah.
It's like, oh, I mean, who is the insurance company? It's a bunch of people that work there, and there might be some corporate things that that are greedy, and they might and I'm sure people have been taken advantage of or whatever, but there's always the other side of it too, right? It's like when, for instance, somebody has a claim on their house, like a roof. Your roof's 25 years old. You need to replace your roof, and not wait for wind and hail to come through to take care of it. It's like there's certain things that are maintenance. Insurance is just not a maintenance program until we change our view on exactly what we need to use it for. It's contributing to the problem. And people take advantage of that from a consumer standpoint. Sometimes the contractors take advantage of it. But again, I've found overall, by a big margin, I've seen a lot of good happen when people have claims and they're taken care of. I've seen fires. I've delivered life insurance claims, checks to families to help them continue to move on. I've seen bad accidents where people's cars were restored, their health was restored. I mean, there's a lot of good that comes out of it, but anywhere in life you have a lot of money, there's just going to be bad actors. And it's just never one way. It's not the insurance company. It's not always the consumer. It's not always the attorneys. It's not always the government. I mean, there's a lot to it. But there are bad people in all of those areas, and they do take advantage, and it does affect everybody else. Try and do the right thing, right?
That's right. Yeah. You hit the nail on the head. Do right. People before profits. It's just, you have to. It's the way of doing business, the right way.
For sure.
But man, I'm pumped that we got to have this conversation, really get into it. We're getting close to our full time here, and we're about to jump into some other meetings and things like that. So, but yeah, dude, if there's anybody out there who is looking at this, maybe they have more questions, or hey, the hurricanes that we saw down in Florida and the fires that I'm now seeing in California is really making me think through my insurance. And knowing what my coverages are. Can you just explain them to me? Or, hey, this has really made me think. I've got family in my house. Maybe I need to talk through life insurance, or, I've got a business and I'm in a big area and I'm worried about this now too. How to business insurance. What would be the best way for me to get people in contact with you?
Yeah. So there's a couple ways. First of all, you can find us on the web, Royal, ROYAL, oath, OATH, like taking an oath, insurance.com. Everybody says Royal Oak Insurance. No, it's Royal Oath. And also if you do 586-238-3535, that is our main line here. And agents are standing by to help you now.
I love it. That's good. But like I said, man, thankful that you were able to jump in on this and share kind of your expertise and thoughts on everything, and make it a regular thing. I think it'd be fun.
Happy to be on. I'm gonna I'll do more content this year. First couple of years of business, it was just all about getting our ducks in a row and growing and things like that. But because we had sold an agency and started this one a few years, 3 years now. So so we're kind of in a good spot to be able to do some more of this kind of stuff. So
I love it. I love it. Thankful for you all. Yeah, for sure. Thankful for you all too. Thanks for checking out today's episode of Tuesdays with Rory. Like I said, if you guys have any questions at all, whether it be the insurance side or the real estate side, reach out to us here at Macdon Associates and Royal Oath Insurance.com. And we'd be happy to help you guys out, even if it's just explaining what you currently have. So thankful for you. Have a very blessed day. We'll see you.